Good morning, good evening, good afternoon, traders around the world. This is Phil V at Trading Capital Markets, and today we are the 30th of June, 2025. Currently 9:02 a.m., and this is the Nasdaq pre-market analysis. So Asia, start of Asia, open, went to this volume imbalance. After that, took this internal range, liquidity high, started building above it, right? After that, we came back into this chop a little bit over here at the open, like a little bit past the open. It's like 30 minutes, 20 minutes past the open. We came back probably to like 70%. Take this high, this low. Yeah, right here. 70%, and then we started expanding higher, right? We took this high again, we took this high also, and we have um, two back-to-back fair value gaps with a volume imbalance stacks between them. So that shows like upward momentum right here and right here. With a little volume imbalance in between them. And now we're going to color it in blue. Okay, so got into the first one. Typically, you put your stop loss at the middle, a little bit like 2 points past the middle of the second one when you're entering long on these ones, as per Michael J. Huddleston. And you go long. And what happened after that? We took this high, took this high. We have a clear visual of momentum to the upside. And it continued ripping for the rest of the session. Let's go see how many points that is, just for fun. Okay, so let's say we entered here at the top of that fair value gap, and our retracement, our extension is the 1.6 and maybe the 2. So first target would have been here. First target would have been right here. Sorry, let's put it right here, which is a 1.5 to 1, and that's 24 points. And second target could have been at 2, like right here. Let me go ahead and adjust it and put the 2 on it. Where's that 2? Let's put this to 2. Okay. Yeah, 2 is right here. There you go. So that's 30 points. That's a 1.88 to 1. After we analyze this, let's go to the London session and see what happens in the London session. So in the London session, I see something obvious that was happening, and it probably would have been not so obvious while it was happening, but after the fact, it's quite a lot easier to spot these things. So over here you have 1, 2, and 3 lows. Okay, let's mark them down. 1, and this is going to be sell side. 1, 2, and 3. Okay, so on this drive down, which coincides with let's see, dashed space. I like putting a little indicator on called over here, time cycles over here, like for the macros. Okay, like Michael J. Huddleston taught us the macros, but these are extended by 5 minutes on each side. So this is at 15 instead of 50, 45, and it extends all the way to 315. So let me show you what happened, and you're gonna see. So exactly at the macro, okay, we took out these lows. Let's box it up. So this was macro time, all the way to here. Maybe just a little bit out by a minute, but it's okay. It's around that time. So that's a macro box. Okay, came exactly at 315, took these lows, okay, and started building on the other side. So we took that low. Just gonna lower this because we don't really need it. Oh, what's this one? Garbage. Okay. So yeah, we took these lows, one, two, three consecutive lows. Okay. We dipped into this fair value gap. We also, right after taking those lows from this macro, created a bullish fair value gap. Okay. So I think that was our signal right here of getting in. And we got multiple opportunities of getting in also at that bullish fair value gap, which um, also shows us a change in structure, market structure. So we had from this low to this high to this low to this high and then to this low because the body is closed below this low. That's why I'm taking it. And after that, we took from this low all the way here to this high. Okay. So then we were playing within this price leg because we took internal range liquidity and changed market structure within the leg. So let me just take off this indicator like that we could see properly. So after taking those, and you see the macro finishing right here, so we're within the times, we would have entered exactly at this fair value gap right here. So right after. But to be fair, I would have probably waited until this was broken. This high was broken. So like in this part right here, you see this candle broke this high over here and closed above. So then I would have waited for a return over here. After that, what I see as an obvious target with these two highs, right? So let's say right here. So that's a 2.57 to 1. And we had multiple opportunities to enter in this trade into this fair value gap. 1, 2, 3, 4, 5, 6 opportunities. And I like how it respected the price action. So from here all the way down to here, this was the new high, right? Over here. And did not go below this low. Okay. Did not go below this low. Continued higher. We'll take this high, this low, and then this high. And that even, so after this, you see, after breaking this low and closing below, it used the first fair value gap to continue a little bit lower. That created below this low. So after changing the market structure within this price leg over here, we use this over here to make another little push lower and then continue higher, much higher. So that was the London session, which was pretty nice, pretty clean. And now we're at the New York session. So we had that breakdown in market structure over here, 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 not here. This was just a liquidity sweep. After that, back up to here, and this was the official break right here. Okay, and you can see how it reacted the first time it entered this zone of the official break. The first time sold off. That's not the low. This is the low, so we're still trading within that price leg. So it's doing the overall move. So we're still trading within this price leg. Let's see. Let's go a little bit more granular. This is gonna be a longer video, but it's worth it. So it happened once again at the same timelines, right? Over here, we had these relative equal lows. That's pretty cool. So we had all of these lows right here. Let's take this. Let's take these guys off. Ciao, bye. And happened once again. So we had the first time that we dipped into the macro. Why isn't it showing? I don't know. Delete pane, put back the pane. There you go. Okay. So the first time it dipped into the macro right here after taking these lows, did the same thing. After that, we had this low, this macro, the 845 to 915. Took this low, this low, this low, this low, this low, exactly at the macro, and did the same thing again. Let me show you guys what it did with the market structure. So over here, it stayed in that leg, okay. This, same thing over here. Took this high, you see right over here. Took this high on the right, and that was in a macro time. So exactly at 750, took that high, and then continued lower. Flip this bullish fair value gap up top over here. Boom, boom, boom. This didn't go higher. Here's that leg lower. And the official break. Boom till there. After that, up here. After that, lower. And this was the change in structure. The change in structure after taking all of this liquidity, 1, 2, 3, 4, 5 lows. And you see on the right side, it took it and changed exactly at a macro. So that being said, our entry would have been over here, not there, sorry. Would have been over here at the beginning of this fair value gap. So from here to that gap, right here, stops would have been right here, and targets would have been above these highs that are relatively flat. And that would have been a 1.5 to 1. Okay? And that was the beginning of the first bearish fair value gap under these lows. That's it for this morning, for this Nasdaq pre-market analysis on every session. I hope you guys enjoyed. And yeah, catch you at 9:30 a.m. on the live. Peace, traders.